Hey everyone, welcome back. Happy Tuesday. Hope you guys are having an awesome day on the market. Everything is green today. The market is up, even though there has been some not so good news. I guess there's been a tweet that there was a potential missile attack in Poland and sending the market into a little bit of a sell-off in the last hour or so. So everything's kind of been, an hour ago it was a bit flat. Tommy says hi. Thank you very much, Tommy, for joining, and appreciate all the likes, guys. This helps a ton. When you're online, if you give me a like, that's great. Otherwise, leave a comment. We'll talk about whatever stocks you want, whatever positions you want. If you have a specific type of trade you want to look at or you want me to analyze, I know, especially for my patrons, I play a whole variety of different complex trades. So it gives me flexibility. It makes it easy for me to put on trades in any position, anytime. Unlike, a lot of strategies or option traders where they're like waiting for opportunity, I don't have to wait. I just put on tons of different trades. So Ed Gardina says hello. So hello, Ed. Thank you guys for joining me. Let's jump into the screen here. One of the things that's popping today is Taiwan Semiconductors, TSM. Now, I've had a slightly bullish outlook on TSM for a little while, and obviously so has Warren Buffett. Now, it was announced that Berkshire Hathaway bought a couple $2 billion worth of the stock, and you can see what happened today over at Seeking Alpha. Yesterday, stock was trading at $72.80. Right here, we can see that. And this has had a hold rating on it for quite a while. All of a sudden, with this price increase up 10% today, was even up higher than that. The quant rating, the AI algorithm is recommending this as a strong buy. We've been long this position because it's been a profitable company, and the momentum was just poor. Well, that momentum is starting to turn around, and with people like Buffett stepping in, this is big news, causing this price increase. I love Seeking Alpha. It's one of the things that I use on a daily basis whenever I'm looking at any position because it helps it gives me a little bit of insight. There is a promotion. I've got a link special just for subscribers and for viewers of my channel. It's like $99 for the first year. So that's a better deal than you can find anywhere else. There's a link down in the description below. Of course, I get a little affiliate kickback if you use that, but it is a service that I use myself and my patrons know. I post all the time. So if you guys are ever wondering about what the quant rating is, and you're just reach out, and I will always post that for you. But Seeking Alpha, great service, very inexpensive, and that AI, has changed my trading immensely. So that is one thing that I'm looking at. Gordon's saying there's a Reuters citing article that has a Russian missile hit in Poland, markets dropping like a stone. Yeah, thanks to Gordon for mentioning. There was a tweet about it, and the market has been selling off. So let's take a look at, let's just look at the market right now. Let's just look at SPY and kind of what has happened over the past, oops. Let me get on the right. Let me get on the right SPY here. So looking at Qs, still up 0.5%. SPY right here, flat on the day after this news. If we look at yes, I know that is too long. If we look at the minute-to-minute candles, let's look at the 5-minute candles for the day. You can see what happened once this tweet came out. The market dropped considerably. Now, it completely fall out? No, not necessarily. We're back at yesterday's close. So there was a large gap up on the open this morning, but we did drop down on this news, the potential missile attack in Poland. So this is a pretty major thing. I hope that this is not the start of World War III. This is not what we want to see. We learn more as watching from Colorado Springs. Welcome. That's awesome. I love Colorado Springs. I've never been, but it sounds amazing, doesn't it? Yeah, I hope you're having better weather than we are. We're just out on the skating rink that is our street, trying to walk down to the lake, and it was just treacherous out there. And then Gordon says, my already worthless 0 DTE puts way out of the money, just went green. Right. So I'm assuming that you are making money off that if they went green. I usually trade 0 DTE stuff that I want them to go to worthless. So that's maybe good. but maybe not. I mean, this doesn't really affect my personal portfolio, these kind of moves, because I am a delta neutral trader. And I always like to talk about kind of what that is, like what is delta neutral and how do we get there? Well, one of the things that we can do, if I go back to the daily, is for delta neutrality, is I can actually target out a range where I make the same amount of money if the stock stays, below a certain level or above a certain level. And typically you can kind of see on the charts oftentimes where the range is without being too crazy about it. This blue cone on IBKR, which is controlled by this little arrow down here, if you slide that over, you can see this blue cone if you have that turned on in the settings. And it basically shows you out in time where the probability, the statistical probability based on the current implied volatility, where the stock is going to end up. So, for a lot of people, myself and a lot of other traders, I don't like to take a directional bias. I don't want to have to be correct directionally. I want to make money if it goes up or down, and I want to be able to adjust these and put positions on that make money if it stays in this range. And it's pretty simple to do. Like if we look out right now, December 19th, I'm just going to draw a little line on here at December 16th, which is the next monthly cycle. So if we actually, I'm just going to clear everything off. Let's go to December 16th and let's just kind of put this cone in, so to speak, and say, well, here's the 68% probability of profit. And then we just draw a line over here and say, well, where is it likely to be trading statistically? Well, you can see it's just above 420, so about 422, maybe 224 or 424, and then on the downside about 368 or so. That would be the 68% probability of profit. And you can see how I've done that. I've just drawn the line at the expiration date. The cone is already drawn for me by IBKR, and then I've just moved my line over so I can see more easily where this is. I could drag the little arrow. That's another way I could do it. But in this case, it's statistically probable that we'll be below 424 and above 368. So let's see if we can put on a trade that reflects that and makes money in that way. So I'm going to pull up the options chain. So this is not a stock position at all. I'm going to switch over to tab view, and I'm going to look at the December 16th, which is one of the regular contracts. You see an IBKR, it's a regular, which means it's not a weekly. So that's going to be a Friday expiration, 31 days. Now the the VIX is actually a little bit lower than it has been in recent times. We're seeing a bit of a spike today, change up 9%, but we're at this 26% expected move over the next year. That's what this is indicating. So the VIX is showing us that we have a plus or minus 26% return, or plus or minus 26% change in the S&P 500 from the current level of 396 over the next year. So this is a good level to sell premium especially when the VIX is above 24. That's kind of the nice spot. So this increased volatility is actually a blessing for premium sellers. And what we're going to do is we're going to look out, and you can see the color coding on IBKR. This blue actually shows us exactly where that 368 was. I didn't have to draw those lines. You can just look at either the delta, 18 delta. Or we can look at this blue section here in the middle. If you look at the chain right here, there's a darker blue color. And so it's very, very easy with a broker to just be able to scroll down and see where that cone changes. So we look at this 422. So exactly what I said. I mean, this is statistical trading. So we're looking at the numbers. The numbers don't lie. This is efficient market strategy. That's what this is. This is the at the money position, 396. We're doing two similar delta positions to give ourselves a directional trade that has zero direction, essentially. We want it to stay somewhere in the range. This trade, these are very large trades. I mean, this is 100 shares of a $400 stock. So it's about a $40,000 cash secured position. The margin implication in Canadian dollars for a single contract is 13,000. Now, if I was assigned, the break even is 362. So I would need, if I was assigned the puts, I would need $36,000 in my account. This margin could expand, and it's something to take into consideration. It's why we don't use all the margin in our accounts. So that is the delta neutral strategy. And you can see what happens. There's the 76% probability of profit, which is very, very good. And we have a very wide range. And the maximum return on this obviously is the amount of credit collected, because in this case, what I'm doing is I'm selling first. I'm selling the contracts, and the put contract is an agreement to buy shares. The call contract is an agreement to sell shares. And that's all I'm doing, is I am entering into that contract, and for that I am receiving money. So if you're new to options trading, this is the core strategy. This is what everything is built off of. We can get as complex as we like outside of this. If I was worried about more downside and I wanted to create a little profit spike, then I could create spikes on either side. That's kind of why I was setting this up, because this is the type of trade that is like a bread and butter trade, very easy to manage. Put them on at, somewhere between 30 and 60 days, take them off somewhere between 15 and 30 days. If you watch a lot of Tasty Trade, you see that statistically that 45 days to expiration is a really good time, getting out at 21 days to expiration. So right now we're 31 days from the December 16th contracts. I could easily do a strangle at a later date. In this market, I have found that things are moving quite frequently to the edge. So what will happen is I enter it, and then because there's been so much movement, the stock is moving right to one side or right to the other side. And it has been difficult to make money, and some of these strategies haven't been performing very well by themselves. So what I've done is I've been doing a little bit of a hybrid position on these. One of the simplest things we can do is just double up these. We can just sell two of both contracts. So now we've doubled the position, which is doubling the risk. It's now a $53,000 margin implication. And what I can do is then I can buy a closer to at the money strategy. So in this case, 368, what I might do is do like a, this is a small debit that we'd be entering this for. So I don't want to spend too much money, but in this case, it's $4 wide, which is going to give me a $4 wide spike. See how this has adjusted the profit profile. I live and die by this profit profile. This is what I'm looking at all the time. If I want to trade very specifically and target certain areas, then this allows me to do this in a way that is a little bit safer, because I can hold a little bit closer to expiration. It's sometimes not worth it, and sometimes it is. This is one of those trades that this is kind of the simple thing, turning the short put into a put ratio spread. So buying a closer to at the money long put and then selling a second short put. This is a very, very simple strategy. What we end up with is an unlimited loss Batman trade. So it looks like an iron condor, except, sorry, it doesn't look like an iron condor. Looks like a strangle, but it has these two little bat ears on the side. So that's sometimes referred to as a Batman. It's unlimited loss on the upside, and our break-evens are 360 and 429. So they're actually wider break-evens than that strangle. So this gives us a little bit more lateral room, but the amount of credit that I collect today is actually less. You can see that it's only gets open for about 380 bucks, which means that if this stock does stay right in the middle, I don't make as much as just doing the strangle. But if it moves to the outside, I actually have the potential of making a little bit more, and it can be worth it. I mean, in this case, there's a range where I could make $600 or $700 instead of that 500 bucks. On the shorter duration, as soon as I'm into shorter duration trades, these types of trades come into play. I think that this has been a very much a winning strategy this year, especially on trades that are like a week long or 10 days long. On 30 days, it's a little bit harder because to get into that spike, you actually have to hold right and close to expiration. Like if I show you what the profit profile looks like on December 6th, even if we were right in the spike, it would still actually be a losing trade if the stock was trading at 424 or 422 on December 6th, which is just 10 days before expiration. If we scroll down to December 13th, now it is still a winning trade, $300 profit, but still only $300 profit if it's in the spike. That's 3 days before expiration. So you really have to wait on these to get, maybe I'll zoom in a little bit for you here. You really have to wait to the end to take advantage of this. Even if we look at the day before, that is still, there's a substantial move in that last day. And in fact, this often happens in the last couple of hours. So in order for you to get this spike, the stock has to really be trading right in this narrow range. And it doesn't always work out. Usually where you want it to be is somewhere in here. And this is the sweet spot. And if you're playing Batmans, that's kind of the sweet spot. You want it to run up and into this spike, but not necessarily up in the spike. If it's trading here like the day before, it's a pretty nice little trade. Then the day of, if you got to move into this side, you can usually take it off for a nice profit. As soon as you're on the other side, you can see how quick that slope falls off. So dangerous game when it goes over the peak. But this is a type of setup that has been quite successful this year, and it's kind of a combination of trades. So it's a ratio spread, which actually benefits from a mid IV and a strangle, which is a high IV trade. So you get the best of both worlds. And if you did it on a comparison, like side by side, you'd see that if the stock stays in the middle, you don't make as much with a Batman, but you have more potential on the outside and a little bit less worry, I think. SPY puts, yes, close them for $100+ per contract. Wow, nice. Yeah, good for you, Gordon. That's nice when you're playing those kind of 0 DTE things. I don't buy puts in general. That's not really my thing. Chop says SC. I'm assuming that's a ticker. I'm not familiar with SC. I don't know what SC is, so just looking up here. Yeah, I'll have to ask again. I'm not really sure. Awesome. We got 14 people online. So if that makes sense, if the Batman makes sense, what other types? Oh, South Carolina. Perfect. Well, thanks for watching from South Carolina. Another part of the world I've never been to. I've never really traveled the Eastern United States. I would love to. I'd love to do like southern states and do some barbecue because I love to travel and eat. Let us get over to what do I want to look at? You guys got to give me some ideas so that I can look at some different trades. Otherwise, I'm going to go over to my watch list and just take a look. Everything's green. It's not typically a day where I enter trades. Even though the VIX is up, this is like such an unusual day because the VIX is actually up while the market is up, which is highly unusual. Normally the VIX is popping when the market is dropping. And so I'm thankful for those trades or those options when they come on, or those choices of being able to get into positions. Fiverr, this is one of the stocks I closed today. We had a really great up move, made a nice return on capital, taking a bullish move, and it just moved right up into the profitable range. So got out of my positions in Fiverr. I will be looking to get into them when they come back down. Other notable things that I've been watching, EA isn't actually on this list, but EA is a stock that I like to kind of cycle in and out of, which is Electronic Arts. And right now they're at 128. They're down 1%. That's not quite low enough for me. If we look at the stock chart, where's the chart here? You can see it's still, even with that down move, it's still above its moving averages. So I will wait until it's under that 125. If it comes back down here, I'll be looking to enter positions. GoPro has had a nice rally this last little while. I started selling calls against GoPro again. I have a long-term bullish outlook on it, but very, very slow growth. And there's definitely enough weekly premium in this small little stock to sell against it. So it's pretty good. What else do we have in here? Apple was up. I sold calls in this yesterday. So I've basically trying to reduce some of my delta exposure in my long stock positions in companies like Apple, Amazon, Google, TSM. Do you consider trading futures sometimes? Yes, I do. We can look at the futures if you like. I already talked about TSM at the beginning, Wendell. So you have to go back and watch, but I did talk about it. Warren Buffett's buying up, and I have changed my outlook to super bullish on TSM. Let's look at the ES filter. If you want to look at MES, maybe MES is a little bit more appropriate for traders. So on IBKR, you can just choose this continuous contract. Just choose MES. And they can be a little bit odd to look at when we look at the option chain. I feel like it's harder to determine like what you're looking at in IBKR specifically. But this will be the current contract, 31 days. So if I wanted to do a futures contract, or I would trade it with options. I don't typically swing trade futures. I know how to do it, but it's not something that I typically do. But we can play with these and just sell a strangle on this if we wanted. So here's the 18. These are a little more capital efficient than trading SPY. So I say that, and then it's going to have a huge margin requirement. Now, yeah, the margin requirement here is like $1,800. So because this is the micros, this is micro S&P 500, the E-mini S&P 500 micro is what it is. This is the December 16th contract, so 31 days away, 3740 put and a 4240 call. So if you looked at the chart, that's 3740 and 4240. Why are you not loading? Zip over to something else here. So when we're looking at the futures, what we're looking at is the futures on an index. So we're looking here at the 4240 level. So that would be the call up here at 4240, and then on the downside, what were we? What did we say here? 3740. So we would set up a strangle that 3740, somewhere right in here. And we can see that that's a delta neutral strangle, and the stock trading right here, the index trading right here, very, very efficient margin wise. And the options on the futures work in the same sort of way, in that there's theta decay on the options. So in this case, $2.24 in theta decay. And the way that it works is it's a bit funny. You're selling and you're getting like 50 points per, I think it works out to 50 per. So you take this number and you divide it by 50. Does that make sense? No. In this one, we times it by 5 on MES. You times it by 5, so $49, and then times by 5 gives us this 177. Well, that doesn't seem to be working. You can see how often I trade this. But if you were to click submit, here's the credit you would collect, $250. Yeah, so it is times 5. I was right. So it's $50 times 5. You get a credit of $254. The commission's 82 cents. So it's like inexpensive commissions, very, very, very small margin requirement on when you play the futures. So that's one way to play options on futures, and it's very similar to playing SPY. So for smaller accounts, that can be a good way to have exposure to the market, and you're basically trading the broader index here, SPX. Now I've deleted my lines off here, but the 4240, 3740. So that is how I would consider trading it. You know, I don't like to swing trade. I'm just not very good at it, is the reality. Like if I can do it, but I don't even know how to change that on here. I just don't like it. It's too stressful for me. If I wanted to trade these futures, I could just buy futures. You know, if I thought that this was going to go down from here, I could just sell it. Basically, I could grab the MES, go to the stock chain here. I don't know why it doesn't pop up when I'm in this mode, but I can just go to sell, and I can just sell those futures. And doing that today, if I hit submit, well, that's pretty expensive. So depending on how you want to trade it, you could sell that future and you would be instantly short the future. This would be a down position. Buying and selling futures is a very, very easy way to just get exposure, directional exposure to the market. It's not something that I do. I keep a ton of positions on, and I control my delta just by adjusting my options positions. And we were talking about delta this morning, and like typically I'm short delta is my normal position because I'm short Vega. Because I sell options, I have volatility risk. If the volatility spikes and I carry short Vega, then all of my options get more expensive as volatility increases. Generally, and unlike today is an odd day. The market is up, the S&P 500 is up, and the VIX is up at the same time. This is an extreme situation. Normally, when the SPY is down, the volatility is up. And when the SPY is up, the volatility is reduced slightly. So this is a weird day, but it's because of, obviously what's happening in Poland. When I have a short volatility risk in my portfolio, when that volatility spikes, it's usually when there's a down move in the market. So I want to offset that by having a directional bias to the downside. So when my volatility is hurting my account, the directional assumption is helping my account. This helps keep my portfolio neutral. What has happened over the course of this year is we've been kind of in this high volatility, and I've been less and less worried about volatility expansion. So I'm not so worried about the volatility expansion hurting my account. Therefore, I've leaned a little bit more to the delta, to a long delta position. So I've been carrying longer deltas, and it's one of the things that I've been doing. So on up days, it helps me. On down days, obviously, I have a slight directional bias, but usually I do it on a stock by stock basis. So if you're looking at a stock, and you want to change what you're looking at, your exposure, then you would adjust it on a stock by stock basis. Like if you look at Amazon right here, like this little Amazon trade that we have on, which expires in a couple of days, it's got a 103 put. If we look at it, it's very much directionally biased to the upside. The stock's trading at 99, the short put's at 103. So if we were to look at the risk navigator on here, if we look at the risk navigator, you would see where this was. If we look at Amazon's position, it looks very directionally biased. So we can see the Q delta, the Q's deltas here, and we can see that the delta is positive on the whole position. The put has a 31 positive delta. So it's not the same as owning stock completely, 100 shares, but it is the equivalent of owning, 31 of the Qs. So that's kind of what it's controlling. If we look at the profit profile, I said that at the beginning of this, that I live and die by profit profiles. This is what I'm looking at. Am I directionally neutral? No, because a directionally neutral trade would have a profit profile like this. And I would make the same amount of money if the stock went down or if it went up. But in this case, I make money on this particular strangle if Amazon goes up. Therefore, I have long deltas. And when we talk about deltas in general and delta neutral, this is how we look at it. We look at it on a stock by stock position. This is not a trade that, I've not been managing this in this account. Obviously, it's only got a couple of days left. And it's not the type of trade that I would want to hold in my account because it has too much directional bias in it. If we look at this short put on Airbnb, this is a little bit better position because the put is out of the money. So even though it's a similar position with a short put, if we look at this position on Airbnb, there's obviously other stocks in here. Let's look at the other positions. Airbnb has a long call, which is a bullish position, and then it has a short stock, which is a bearish position. But this is a much more directionally flat or neutral position. Let's click this a little bit bigger. People ask me about the risk navigator all the time. I like using it. I just need to scroll down here to the date. We can see the expiration date. There's kind of what this position is going to look like at expiration. So if Airbnb goes up to 120, then this position is going to lose money from its current value. But if it goes down to 100, the short stock will be making money as well as that short put. So this actually has a slightly negative delta to it. And at expiration, right now, it probably shows as a positive delta or very, very neutral. And if we look at it, Q's delta, the whole position on Airbnb is just -2. So it's very, very flat. as opposed to if you just had stock in something, the deltas would be much higher. I can show you that. If you just want to buy, what if I just buy some shares here? So if I buy 100 shares, let's just do that at the, let's just get this filled at the ask. So this is going to be $18,000. This is in just a demo account. But if I go over to that risk navigator now, if I look at the risk navigator and I pull up that IWM position, you will see that it is just a straight line. And this is the woes of buying stock. I mean, buying stock like this is I make money if the stock goes up, and I instantly lose money if the stock goes down. It's a very, very straight line. I don't think it's a very good way to trade. And part of the reason I don't like it as a trading strategy is because I don't think that IWM is going to be at 240 in the next month. So if I look at the chart on IWM, why would I want to make money on something that I don't think is going to be at $240. Let's just scroll out here a little bit. I mean, it could be. Don't get me wrong. It could go to 240, but in my opinion, it's not very likely that the stock is going to go up here. So why would I have a profit profile that looks like that? That doesn't make a lot of sense to me. So I can easily correct this. And the first thing I would do to reduce my deltas is sell a call against it. So in this case right now, it's got 50 Qs deltas. That's the stock position does. So that's what I'm looking at is the how much it is relative to the Qs, 50 Q deltas. The first easiest way to do it is to sell a call against it and sell an in the money call. I will reduce my delta exposure completely. What if I decided to sell for 180 bucks a month out? Let's look at the option chain and see how much money we can get back for that stock that we just bought. So I'm going to pull up the chain. I'm going to look out a month. Find my mouse here. For the 180, I can actually get $1,100 back by selling this. This is a 30 delta put. It's the equivalent of a 30 delta put or 72 delta. So I'm selling in the money covered call. And by doing that, I get a credit of $1,100. So let's just do that. I'm going to go submit, and you're going to see I'm going to get from that purchase, that $17,000 purchase I made, I just get $1,100 back. And you're thinking, well, why would you do that? Well, what it does is it changes my risk profile completely. So when I look now at my IWM position, now I only have 14 deltas. I'm still bullish. I still make money if the stock goes up. I just don't make nearly as much. And the big thing is at expiration now, if the stock is trading at the exact same price that it is today, I actually make $270 on this trade. So it is allowing me to make some money. Now, I still don't think that the stock is trading at 240 is going to make me money up here, or why do I need to make money up there? I have zero assumption that it's going to be there. Maybe it'll trade at like 220, but what I would like in an ideal world is to actually lose money at 240 if it means I can make this profit tent taller. So in this case, it's hard to see on here, but we're looking at like a max profit of around, $300 or so. So let's see if I can increase that even further. And one of the things I can do is I can sell a second call against this. So the first one I sold in the money, the second one I'm going to sell out of the money, and I'm going to look at 31 days. It also gives you a good indicator of how much the market or the other traders think that this is going to go up. Stock's trading at 187. Like, look, there's no value in buying these calls. This is like lotto ticket plays. So nobody thinks that it's going to go up there. Probably a much smarter trade would be to sell a 30 delta call against this at 196 and get some more money back in my pocket. So I would get another $246 in this case. I'm going to go submit. This does use margin, selling this second call, but what's going to end up happening is I'm going to end up with a position that looks like a strangle. Did that fill? No. Did I hit submit? Is it working? Maybe I'll stay on the screen, and when it fills, it will change the profit profile. That'd be nice because you'll see it just instantly change. I don't know if we can do that. Let's see. Let's see if I can get this in a position where I can adjust that order. And oh, okay, can't. I want to get this filled because I don't like you guys having to wait. But I'm just gonna update this for less money. Order filled. There we go. And now it looks like a strangle. Well, this is a delta neutral trade. And now if I'm going to make money, if the stock doesn't move at all, I make $600. And I don't need it to move up or down. And if it moves down, I can still make money. And if it moves up, I can still make money. So this pink chart becomes that's the goal. You know, that's what I want as a delta neutral trader. Now the secret is to adjust these all the time and try to maintain this. So I've shown you how to do this with a long stock position. You just sell 2 calls against the 100 shares, and then we can adjust this as much as we want. What am I trying to look for here? I just want to show you what the position is that we're looking at. So what this is 100 shares of stock, which is long deltas. You can see 50. Then December 16th, 196 call, which is out of the money. So it has a negative delta 14. And then IWM December 16th, the 180 call, which is in the money, and it has a negative 36 delta. So total, we're at a slightly negative delta of -1. It's about as delta neutral as you can get. And the theta decay on this is $19 a day. So I get paid $19 a day for the time passing based on today's volatility index, which, as I said, is high. So this is one way to reduce the directional exposure in our account. Now you can lose money on the upside. You know, like Etsy right now is pushing up against my positions, and I have. My curve was centered at one point, and now it's not so centered. It's like when the stock moves too much, and it's not a very fun position to be in. Like I would prefer to make money when the stock is going up, but at the same time, I don't mind having short deltas when we look at that position overall. You can see the stock's trading at 126. If I go over to the screen, let's just look at trading view. You can see why I might want to have some short deltas in here. Look at, Etsy used to be a higher valued stock, obviously, and it might go back up there. I'm trying to zoom in here a little bit so you can see the recent Bollinger Bands. But this is the action of the stock. Earnings were here; they were very good, and we've seen quite a strong move up here. But the Bollinger Band is actually expanding on the downside. When I'm targeting something like this, I'm often looking at it going like, well, it's had lots of days. At some point, some sellers are going to step in, and this up move is going to revert down. It doesn't always happen. Of course, the stock could just keep going, and this could be a completely parabolic move. That's not the way I play. I'm targeting somewhere in that zone. So when I'm targeting this zone, I want to have short deltas. So that's what I'm talking about on a stock by stock basis. If this continues to rise up, then this Bollinger will creep up, and then what I'll do is I'll move my target. But for right now, my sweet spot for the end of the week is here. So I've got a few more days. I think it might drop down. I can change my mind at any time. As this goes up, I may just move this sweet spot higher. That's all I'm doing all the time, is just trying to predict where the stocks are going to be. Do you have a separate video about your TWS setup? I do have a video specifically on my TWS setup, and it is not like this setup at all. I have a large monitor. If I show you, can't even see it, but I have a 48-inch screen there, and then I've got two 27-inch 4K screens here. And so I typically look at TWS on my 48-inch screen, but I have it set up that would work and work fine on a 27-inch. The reason I don't show it in these videos is because it's fine to look at, but it's hard for people to see on their phones. So when I go into this mode, if I had all of the windows all spread out and I had this resolution a lot smaller, you wouldn't be able to see these numbers. And in fact, it's probably hard for you to see the numbers. One of the things you can do is make sure that you have the 1080p on your video. If you go down to the settings here, I think it's on this side, on YouTube, you can just change your settings to at least 1080p. I do stream in 1080p, so you should be able to see this with some clarity and be able to see the screen at this resolution. But I have a video on setting up TWS. It's called Setting Up Interactive Brokers. I think that's what it's called, something like that. Pretty easy to find. I have an interactive brokers playlist actually, so there's some little things that I use in it. Bob says, new to Discord from Arizona. Hi, Bob. Welcome. And thanks for the chat the last couple days in the Discord. I know you're a brand new patron, just a couple days in. This is your first week trading with us. And I'm sure you're getting up to speed with some of the craziness that ensues, because I like to put on some really bizarre trades sometimes, especially in this market. Wendell says, thanks, you're very welcome. Thank you. Anton says, you still prefer options to futures trading? Is there a reason why? Yeah, I'm good at trading options. Is it because futures are better for swing trading? I'm also not good at swing trading and enjoy option investing more. Yeah, you know what? It's totally personal choice. I think those are the things. Like, I, for a long time, was like a dividend investor. I bought stocks and I just collected dividends. And I didn't understand what delta neutral trading was. I didn't know how to make money in a bear market. When the market came down, I lost money because my share value decreased. And I used to dollar cost average and I would do things like that. But at the end of the day, I relied on directional moves in the market to make money. And when I discovered that I didn't have to do that, and I discovered it through options, then I was like, that was a mind-blowing moment. I'm like, what do you mean? I can make money if the stock, as long as the stock stays above a certain level, and I can make the same amount of money even if it goes really close to that. I don't just start losing money the minute I get into a trade. And I started very, very basically, I started trading short puts. That was it. I traded short puts. I would buy stock, I would roll the short puts. And I did that for years. It's a very simplistic strategy. It works extremely well. It works much better in a high IV environment. In 2017, I found out that it was not a very good strategy. I didn't make any money. I had positions on, I just couldn't make any money. And so when in 2019, I was kind of slowing down my career and I had a little bit more time, and I decided that I was going to dedicate myself to learning about options that were going to be able to make money. And I have created an entire spreadsheet of some really bizarre plays, right? So there's some things that I trade, like there's a trade called a Marauder, there's a Viking, there's a Humpback, a Rampart. They've all got like crazy names because I need to be able to keep track of them in my head. Like I'm looking at something and I'm slightly bullish. The volatility is mid. I have a target price that is here. What trade can I put on? Well, this morning I was looking at a trade and I'm just like, I want to put on a Humpback. And it's easy once you get in the swing of like learning how the options work. Now, it took me a long time to get there. I'm a software developer. I'm like, building spreadsheets for people. And by doing that and by teaching people how the options work, it really made me focus on how to make money and how to be able to target the ranges that I want to target. And one of the things that I've learned to focus on is that risk navigator, that profit loss chart. So when I'm looking at any sort of setup, I can build this out to look however I like. If I want to have a crazy spike over here, let me just open this up here. If I want to have a profit chart that looks like this, and then it's flat, and then has a little spike here, and then has a little spike here, and then has a whoop like this, the sky's the limit. I could just build this out and say, well, I'll lose money if the stock is trading in this zone, but I make a ton of money if it's trading here, and I make a ton of money here. Now, is this realistic? No, it doesn't make a lot of sense, because in the daily movement of things, the stock moves on a curve. When you get into complex options positions, they do move on this curve, and this white line becomes ever important. But I can do some simplistic things to this, and I can say, well, what if I have a little bit of a downside protection? So this trade, if I was to do this is called a scorpion. I end up with a with a slightly lower break even, and I have a potentially higher reward if the stock moves down. And these trades are great. So if I'm worried, if I want to do an IWM trade and I'm thinking, oh, I think IWM could slide to the downside, but I don't think it's going to go up, I can place this neutral trade, and this little spike helps correct this curve that we're seeing here. There's usually a little bit of put skew in this case. Like we see that quite frequently where there's more risk to the downside if the stock is sliding down. And that curve is not even if you look at it. The pink one, we're dead centered, but on this white one, it's a little bit flatter here and it's a little more robust out here. That is indicative of put skew. There's more risk to the downside. I lose money faster in the short duration. So I can play with that and I can counteract it with complex options. So it's one of the things that I teach in my Discord. Libistrani, good to hear from you. It's always good when I've got like repeat viewers. That's awesome. Word about BABA. Well, did you guys saw the Walmart earnings? I'm assuming this morning. Let's look at BABA. Basically, Walmart was beat earnings by quite a bit. And so stocks like Alibaba, I don't think there was news on BABA. They didn't report earnings, did they? I don't think so. I think that up move was just because of the Walmart earnings that we saw BABA react. But the earnings here are, so when we saw Walmart report, then BABA jumped up. So this is a move directly from Walmart because they're kind of correlated. There's a little bit of correlation. If you went over to like Yahoo Finance and did a correlation, I'm sure they would be very, very similar. Let me pull up you guys know how to do comparison on a stock? Let me just pull one up here. Let's take a look. This is kind of fun. This is like if you do a comparison. So I got stuff all over the screen here. This has already got comparisons on it. So what we're looking at here is Walmart is the blue chart right here. That would be Walmart. And then the purple is SPY, and this is INX. Let's turn that off. So here's Walmart compared to SPY, and we can see that Walmart has had a much better day or much better year than S&P 500. They were pretty well neck and neck for a while, and now Walmart has been trading away from SPY for a while. But if we compare this, let's turn off the S&P 500. Let's do a comparison with BABA and see how closely correlated they are. They're not correlated at all. Wow. I expected, I don't trade BABA. I expected a much higher correlation than that. And this may be because of the exposure from the fact that BABA is a Chinese company. But you can see this is actually fairly non-correlated when we're seeing large down moves in Walmart, actually seeing up moves in BABA, up move in BABA, kind of flat in Walmart. They traded a little bit kind of in sync here, this little range, but then as Walmart went up, BABA's been selling off. I was under the impression that these were much more closely linked. And again, BABA is not something that I trade. Makes me wonder though, that they are hammered down. I mean, some of these stocks are just crazy down, 54%. It's on the 1 year. 50%, 57% from 1 year ago down, and Walmart is flat. I wonder if there's opportunity here in BABA. So let's look at it on TradingView here. We've got BABA, and in this chart, it doesn't look so bad, but when you compare it to Walmart, it really looks terrible, doesn't it? So are they profitable? So usually what I do, and I'm looking at new positions, or stocks that I don't know, the first thing I do is I head over to Seeking Alpha because, it's one of those things that I like to use. We can see over here, we've got valuation C+, it's got poor growth, but it's profitable, which is great. That's one of the things I'm looking for in bear markets, and its momentum is poor. And obviously we could see that from the stock chart. I mean, it's been trending down for a while. If we look even at the chart here, you can see that downtrend that has been there. The Wall Street authors are saying it's a strong buy. Seeking Alpha authors are saying it's a buy. The AI software is only rating it a hold. So, you know, if I was looking at this, I would want to trade slightly to neutral. You can look at the quant rating and kind of see where it is. It's actually very, very close to the buy. So it's not terrible by any stretch. But, you know, I'm not hoping to get rich off this stock anytime soon, according to AI algorithm. So let's take a look at the option premium, because there will be tons in BABA. It's one of those, it is a pretty, very liquid underlying. It's pretty easy to trade. So here we go. Let's set up. It's hard. We're in this like random time where January is too far away. I don't want to do 66 days, and December where we have to go to the weekly to get 45 days. Is there enough liquidity in here? We look at the open option interest, which is, and the volume, these two columns right here. There's not a ton of volume in here, so I probably would want to stick to the monthlies and see how many contracts are being traded on this relative to on the weeklies. And there's not a lot of strike selection either, which is not great. But say I wanted to put on a neutral strategy, can I make some money? Here's the 16 delta at 65, and then the 16 delta at 100. So very wide range. If the stock stays above 65 bucks and below 100, I could make $300. Margin impact is $1,600. So this is going to 70% probability of profit. I mean, this is pretty good on a margin return. If we're talking about return on margin, you know, is this worthwhile? The margin requirement is only $1,600. It is a pretty big trade. It's $6,500 trade. So buying 100 shares of stock for a lot of people, like if you are especially new to options, you may not be able to just buy 100 shares of stock. So what you could do is you could turn this into an iron condor. Usually with condors, I like to go a little bit tighter. So I build up my iron condors, and basically what I'm doing is I'm throwing away some money on the put on a long put, and then that way it caps my loss, and this makes it a much more reasonable trade. Probability of profit here is only 59%. That's a little bit low, so I would want to expand that out. I'm assuming the risk is to the downside on this. 68% probability of profit. There we go. It really comes down to, can I get enough money for this? Now, this is a calculation that a lot of people, especially when they first join my Patreon, they have a hard time wrapping their head around how much money. But in this case, from the top, from the width of the strikes, if you look at this, 60 to 65, that's $5. So that's the max amount of money that it could cost me to buy out the position. But that's not my profit or my loss. That's just how much I would have to pay to exit the position, $5 max on both sides. Because I'm opening the trade for a credit, then the maximum loss on this trade is obviously considerably less than 500, because I collect money to start, and then at the most I have to pay back 500. So it really comes down to how much money can we collect. I usually look for 1/3 the width of the strikes on a 30-day interval. So if we look at, in this case, $5 divided by 3 would be 166. And this premium just isn't quite there. It's paying $1.32, which means you're risking quite a lot relative to how much you could potentially make. So the risk reward ratio here is not 2 to 1 because you're not getting paid enough for the amount of risk that you're taking. $390 potential loss for $110 potential gain. So it's about, it's 3 to 1 and not 2 to 1. I typically want my ratio to be 2 times loss to 1 time potential gain. So hopefully that makes sense. I want to just check over here. Wow, some people have been chatting. The desk calculator is also an essential tool in my opinion. Yes, I completely agree. The desk calculator, mine is fantastic. It's like a Chinese. I got this in Beijing when I was there doing a movie, and so it talks to me in Chinese. I'm not going to turn it on because I never know which button to turn it off, and I don't actually know if it's Mandarin or Cantonese, but it's pretty fun. That was a gift for my birthday, and I've worn it out basically. It's been pretty good. Desk calculator is very important. Blue Stock Trader, NVIDIA earnings this evening. How do you feel about a back ratio or strangle for an earnings play? I don't know about the strangle. NVIDIA, I've got NVIDIA position on, and I have like a synthetic jade lizard, so I've got no upside risk if it decides to explode to the top, which I don't really think it's going to, but you never know with these. Like NVIDIA has been so beaten down. Let's just go over to Seeking Alpha. You can see how much I use this because it's always good to just reiterate what's going on. Profitable, which is why I'm long in general, quant rating as a whole. So this leads me to believe I should play neutral strategies. Part of the problem is the valuation is a little bit high and has been for a while, according to the computer. It's right in the middle of the zone here. We can see the quant rating right in the middle. So let's look at the option chain. First of all, we'll look at this week's options. 3 days away, we're going to find out what the move is. So the stock's trading at 166. We're just going to make sure the strategy builder is on right down here. And we're going to sell the at the money straddle. At the money straddle currently marking at $1,300. So if we use the calculator there times 0.8, we're going to get 1072. So we're looking at a $10 move. So from 156 to a 176. Now I've been in my trade for a little while, and my max profit zone is 155 to 175. That's my max profit zone, but I have no risk to the upside. And you know, this isn't really rocket science. Like when we look at what's going on, we just have to kind of see where the stock has been. And you can see why I have the position on that I do, because I've got lines even drawn on here from where we were. Like when I placed that position, the stock could easily come down, but the stock price was so high before, and we had seen this turn in the moving average here. One of the things that is a little bit scary is this downside, but what we have to understand is that when we play with these positions, when we play them with an appropriate sizing in our account, when we do that kind of thing, it's easy to stomach a roll. Now, I don't have like a huge position in this. I don't have 5,000 shares of NVIDIA. I play this with like 100 shares of NVIDIA. So it's a relatively small position for me. It's like a $17,000 position. And if the stock does come down, because I feel that the company is going to do well long term, then I have no problem holding this stock further. So in this case, I actually have stock. My position is like similar to what I showed you before. It's a long stock position with 2 short calls, one in the money at 155, one out of the money at 175, and then a long call at 180 in case this just blows up. I mean, I'm not expecting it to go up, but I said before, I don't like losing money on the downside. So if it does go up, I will end up losing my shares of NVIDIA. I will have made a nice profit, which is great. And I will be back to cash in that position, and I won't have any hard feelings about it. I'm going to be in and out and making money, which is the point of trading stocks, is making money. If it drops back down, I end up getting to keep my shares. As long as the stock goes down under 155, I keep my shares. So that is a really nice zone. My max profit zone right now is between 175. So if I was to draw this on there, got all sorts of things going on now. 175, there's my max profit zone, 175 to 155. So if the stock stays in that fairly limited range right there, then maximum profit. And obviously, worst case scenario, I have my shares and I have a really low cost basis already. So I've got no complaints there. All of my calls will have expired worthless, and I'll have made a couple $100 selling these calls. And if it goes up, then I lose my shares, and it's been a profitable trade. So that's how I'm trading it with Jade Lizard. If I was entering that today, really simple to do. Clear this off. can do it on whatever cycle you want, but 175, I'm sure you can set up a Jade Lizard like this pretty easily, yeah. So in this case, it's a $5 wide. It's barely profitable, but it is. You still do get a Jade Lizard on this if you can get a credit of at least $5. So it's touch and go to enter it right now. It's marking at $493 or $495. So if I collect $495 and then if the stock does go above 180 and I have to give back $500, then I've made nothing on the trade. So there's virtually no upside risk on this particular one to enter it right now. Break even's at 150. So as long as the stock stays above 150 bucks, I make some money. If it stays between 155 and 175, make 500 bucks in a week without owning the shares. So that's one way to set it up. And again, learning how to use these charts to our advantage. That's a little bit zoomed in. Let's try one more. Learning how to use this chart. And you know, my software, if you are interested in it, you can head over to my website, drawbridgefinance.ca, and you can go to the spreadsheet section and you can look at all the spreadsheet. But the one that I use all the time is this rolling options record keeper. This is the one that I give to my patrons when they sign up. So if you decide to become a patron, you get to see mine that has all the charting capabilities in this, and it shows the adjustments when I'm making adjustments. It allows like 24 different adjustments to be charted out over time. It has a summary sheet. I mean, it's a pretty robust piece of software. It works in Google Sheets. It tracks everything. It marks, it color codes everything green for closed. It tracks my weekly P&Ls. Yeah, it shows like there's a little video about how it kind of works. And you see this if you guys watch my live stream enough. It's got a comparison in it, so you can compare different trades prior to opening. You can see how the profit losses are calculated. Anyways, it's a great little software, and it's by developing this is how I got to the point where I am now, which is I'm now able to just build whatever strategy I want. Like it's pretty awesome to be. I feel so good about option trading. Like I've done this now for a long time, and I used to feel like I was okay at making money, and now I can specifically target exactly what I want to such a degree that it's pretty fun. It's a pretty good place to be. I have zero complaints about my life. It's pretty fun to be able to do this and build this. So I hope you guys are enjoying, and I hope that you're able to ask the questions. And if it doesn't make sense to kind of delve into it, and feel free to reach out. That's why I do this. I mean, I love talking about options. I hope that's clear to you. This is fun for me to join you guys and teach you what I know. Let's look at the more things. Do I use an option scanner? No, I don't. And the reason I don't is because I've been trading now. So I have been trading since 1996. So how many years is that? 96 is when, and I used to use a scanner. I used to take my finger and I'd run down the newspaper and I would like look at the stock price. That was how I scanned for things. And so when you've done this for as long as I have, you get into the point where you're like, what I know is I know the stocks that I want to trade. When somebody asks me about BABA, I don't know about BABA. It's not something that's regularly on my radar. Walmart is something that's in my regular toolkit, so to speak. So what I use is a list of stocks that I like to trade. If you look at my screen here, you can see a handful of them. This is, I don't know how many stocks are on here, 50, 60 maybe. I have about 200 stock that I like to kind of watch. And as I said earlier in this stream, what I like to do is I like to have a position on in most of the positions that I want to trade or have a directional assumption with. So if, for example, if I can pick any stock I want, and I can then pick a directional trade based on having the right tool to apply to my assumption. So in this case with Asana, I am bullish long-term on this. Dustin has been, the CEO of Asana, has been buying shares like crazy. He was buying, I've done videos on this in the past, but he was buying all through this and continues to put on trades in the billions of dollars, just buying. So I can only assume that his goal is to make money off this stock, and we have been range bound for a while. And so what I have been doing is I have been selling calls against this, and all of the call income that I make, I then I buy more shares. So I am putting more money into Asana, but I'm putting it in with money that I've gotten out from selling premium against it. I didn't actually start buying Asana until we were like $50. So, thank goodness, I wasn't buying here at 100. And I'm down on some of these shares. I'm down half my money, but my assumption long-term is bullish. So I can apply a strategy that works. The simplest way to have a bullish strategy is just to have long shares. So that's one of the things that I do. If I wanted to, and part of the reason I do that is because I want to make money on a massive move if it does return to these $100 levels. That would be nice if I could take my money and like quadruple it for the few shares, even though the bulk of my shares would get called away from me at a relatively small gain from their current value. I have the potential, there is some potential, and it's unlimited potential profit by having long shares that don't have calls against it. So that's one way that I do it, and it's why I use that particular stock as an example. If we look at a stock like BB, which isn't even on this list, what other stock can we look at? CCL, great example. This is Carnival. I have no thought whatsoever that this is going to be back at $26. I mean, we are in an extremely a difficult economic situation where inflation rates are extremely high. And I think that companies like this, even if they are making money, and companies like Carnival barely make money, I just can't see the potential of the stock going to 25. When I have an assumption like this, and I'm looking at a position that actually generates quite a bit of money on a weekly basis, this is an $11 stock. The $11.50 call that expires in 3 days gives us $25 in premium. That is an extremely rich premium for a stock that is already at the top of its Bollinger Bands on an extremely large move over the last couple of days. To be able to get 20 cents in a couple of days is massive. If we look at it on a monthly basis, if I'm not being greedy, I only need to make 1% a month on a covered call. So in this case, selling the 14 call, it gives me 21 cents. So that's 1.5%, works out to 18% annualized for agreeing to sell the shares at this level up here. And that is an extreme level from 11 to 14. This is like a 30% move. The stock has to increase in value 30% before those get called. And if they don't increase that, then I make 1.5% regardless of whether the stock moves. And when I'm looking at this position, I can do, quite nice things with it because I understand how the chain works, and I can sell really aggressively. I can say, well, here's my assumption. I don't think that this is going to go above $12. I don't need to buy shares because I don't think they're going to parabolically go up to the moon. And I don't mind making $60 a week on a trade. So the trade that I have on a CCL actually generates $120 a week on a single position. It pays like almost 10% of the original trade that I put on a weekly basis if the stock doesn't move, which I don't think it's going to. So it's one of the reasons, I know this is a long-winded answer, but it's one of the reasons why I don't use a screener, because I don't want to be like constantly trying to filter through stuff that I don't know. What I want to do is look down my list and say like, okay, DBX, like where is it? It's 22.92. I like to buy DBX when it's at like 21. EA, I want to buy it when it's under 125. It's not there yet. eBay, not super bullish on this price. I think this price is too high. Etsy, Etsy's like going up way more than I want it to, especially considering I have a long delta or short delta position on it at this point in time. But I have intimate knowledge of every single position that I have on, and it's one of the things that I think is a great way to be able to invest, because I don't have to rely on a scanner and then trying to like learn about a stock. I know these stocks and I trade them all the time, repeatedly. I just apply the right strategy at the right time. Bob says, yes, you have some exotic trade. Trying to get TOS to execute them is a bit tricky. We did talk about this yesterday, Bob, about the TOS. Like if interactive brokers, when we're looking at building out, like I can show you, I'll show you a trade. Like if we want to do a CCL trade, say I want to do something that is going to make some money over the short duration. Could just do like a really simple poor man's covered call. So this trade right here, poor man's covered call is this component of it. And then there's a diagonal component as well. If we look at the list view, you'd be able to see both the things at once. So in this case, let me just turn off we're going to sell 2 contracts at, I got way crazy here. I should not be selling something that long. Let me just change this to June. I don't think it's a very good idea to set things up too long, because we can have a year like we did last year, and I had some trades that were too long. They're just too costly. So the max risk on this trade is $640. The potential of it is $114 in a week. So what is that percentage wise? If this trade made $114, if it was trading at 111.20, same price, we make 117, and the cost to enter is, let's call it $650. So it's an 18% weekly return. That's the trade setup right there. Not showing them all there, but so buying 2 June, selling 2 calls. They're all calls. So if the stock goes down, worst case scenarios, I lose the money that I invested. If we look out here at 100% move, we would see this trade can easily be set up in Thinkorswim, which is TOS. When we get more complex trades, then it is harder to break them apart, because IBKR does allow me to do up to 6 legs, and a lot of platforms don't. So by doing different trades, like if I wanted to do something like this, I can get a pretty like interesting looking profit chart. Now, does this one really benefit me? Not really, because again, I'm looking at this dotted line mostly. But if I have a specific exit price that I'm trying to find, especially if I'm building out ratio spreads, then some of these trades can work quite well. Generally, what I'm doing is I'm just pairing them out. Like if I couldn't put on this trade all at once, then I would just take one of the diagonals out, because it makes more sense to separate them out into their individual components. So for example, if I wanted to do a ratio spread on let's do it like this. Let's do like a 3-to-1 ratio spread. This is like a 1-3-1 kind of butterfly. Not a butterfly because it's unlimited loss, but this is a ratio spread 3-to-1. Open for a net credit. So I get money, so there's no downside or there's no upside risk. If the stock goes to the moon, I make money. Break even's 844, profit spike to the downside. That's one setup. And if I wanted to do a call spread on the other side, I could do that as well. Well, all of a sudden, now I'm into too many legs for some platforms. Thinkorswim cannot do this. My software can enter this trade. The trade can still be entered even though it gets entered as multiple components. And then what I'm looking for is, what does this profit chart look like? And there, am I creating this weird looking Batman trade? You know, it's got this weird little blip in it. But if this is what I want to do, I'm aiming for this 82% probability of profit, making money between $8.42 and making money between $15. Starting for a credit of actually a pretty decent credit on this trade, 21 cents. So this is more than 1% in a month-long trade. And if the stock moves down into either spike, I can make even more money. If I wanted to set this up, the logical split is just separate out the calls, do the call ratio spread, do the puts. So my strategies are pretty well set up like this because they base them all loosely on iron condors. So when we look at iron condors, like what is it? Well, it's a put spread combined with a call spread, the two different components mashed together. And so the split generally is somewhere in that. Puts on one side, calls on the other. That's kind of the general look and feel of it. Bob says, I'm looking forward to learning. Well, I'm looking forward to you learning as well. And please be vocal. I feel like sometimes in my chat room, I place a lot of trades, and I understand that I do. I trade a ton and I make a lot of adjustments. And sometimes that can be overwhelming and people don't ask questions. I would love for my chat room to be the type of place where people are posting trade ideas, and we can look at potential other ideas of what that is, where the shortfalls could be in the trade. Because the reason that people should be in a group is to be able to utilize the group and talk to other people and get their opinions, because collectively we have different assumptions about things. One of the things that happened last year was, what was it? It was an Intel trade. Now, I don't know if you've looked at Intel's stock chart, but I'm in a couple of groups, and one of them, we never talked about it at all. And there was a bunch of guys that lost a ton of money on Intel. And I was lucky enough to, where is Intel? Intel has been on a rough ride this year, and I could go back and actually pull it up in the Discord chat when we talked about this. But there was a time when and it was somewhere near here where I had taken a long position, and luckily, the group of traders that I have in my group was saying hey, there is some serious woes with Intel right now. They're having this problem building whatever it is, a 7 nanometer chip, and they had some specific insight into this that was great. And because of that conversation, because of that happening in my group, I took off a trade for a very, very small loss. I took it off after it had dipped down, and I'm just using this chart kind of willy-nilly here. I can't remember exactly where it was. Yeah, it was last year at some point, but so somewhere around, yeah. Anyways, doesn't matter. I took it off for a small loss, and thank goodness, because that has helped me. That I would have been in a painful situation rolling short puts, and that kind of conversation, as mundane as it can be, is why trading groups work, because there's a collective knowledge. So. If you haven't thought about joining something, I mean, my group is great. Because I give away the rolling options calculator, basically the first month is free anyway. So it's the same price as buying it on my website, but then you get access to the calculator to download the rolling options record keeper. Then you also get to be in the Discord chat for the month, and it is month to month. I'm not charging people $5,000 up front to learn anything. I give away my personal notes file. It's only for patrons. I don't sell it. Only patrons get it. And that it has the breakdown of every single type of trade that I put on, inclusive of notes of high IV, low IV, bullish direction, setup, everything. It's that document took me so freaking long to build. It was crazy. And I give that away the second you sign up for Patreon. So it's a pretty awesome. I like it. It's fun, and I like to engage with people. So please leave lots of comments. If you're a patron and you're watching, just get out there and post pictures and post screen grabs, and let's talk about it, because it helps. Vladin's asking, hi Levi, do you have any positions in TFSA, and do you have any problems with TFSA room? Well, the TFSA room, I wish I could put more money in it. I would have all my money in my TFSA. If I could, I would literally put every penny that I could in my TFSA. I cannot, because we have a limit. So, January 1st, which just gets to come up here in 6 weeks, I get to make my next deposit into my TFSA. It is very much my number one priority account to get that money in and working for me, because I use options in my TFSA, and because the only options that I use are covered calls, I can make a pretty decent return in there, and that money is tax-free. So I do use it. I don't really indicate when I'm buying or selling inside of my TFSA. That's just frankly, it's nobody's business what account I'm buying or selling in. I already post all of my trade alerts anyways. So when I do it, I am limited to buying stock, selling covered calls. So generally speaking, those are the positions that I'm putting in my TFSA. It's the only position that I play in TFSAs: buy stock, sell covered calls. That's it. Bob says, tried legging into a Batman this morning. TOS rejected the order. Said I'm not approved for this level of options, but I'm approved for level 2. Trying to figure out how to get approved. I would phone them, get on the phone and get them approved, because that's ridiculous. Like, what are they? You're trying to sell a naked call, I'm assuming, unless it's something in a registered account. But you generally speaking, that type of level approval is such like a wank. Like, just lie about it. I mean, that's silly. I shouldn't say that. Don't lie about it, but phone them and get it sorted out, because I can't stand when the brokerage limit us, because typically when I'm putting on a trade, I'm actually, in most cases, I'm trying to protect myself. I'm trying to hedge positions, and those are the ones that gets rejected. And I can't stand it that there's like this checkbox thing that allows them to say, no, you can't put on that trade. You can't protect your own money. It's ridiculous. Anton says, thank you. You're very welcome. Kunal, hey Levi, good to hear your journey, and keep some motivation, that keep calm and keep learning. Are you having a hard time, Kunal? I mean, like, this is, I hope you guys are having a pretty awesome year. I mean, this market has definitely been hard, you know, on any long stock position. It has been tough, but these are the years where we kind of get our bearings and we keep it in check. Last year, you know, I was struggling here way more than you think, because what was happening was I was losing money when the market was moving up, and this is a painful time when we're seeing just like pushing. I mean, luckily, for the most part, I stopped buying stuff. I did have a little bit of a whoopsie daisy right here in November. And this little thing, I put on some limited loss trades that, and my patrons can see them still in my account. They were all small, but unfortunately, like, everything that I put on in this little zone of risky, super risky trades, specifically some unicorns, they all have been just basically obliterated, and I've lost that money. But I played small, and I played within my account size. Most of this year, last year, I wasn't buying anything. I wasn't adding to any positions. I just kept getting more and more cash, because the market was just up and up and up and up and up. One of the things, and I've done videos on this before, is looking at these moving averages, really watching them, and paying attention to these zones where the stock is trading under the moving averages. These are the only times where I consider buying. So in this year, you can see we've had way more opportunity. Like, look at this whole zone right here. That zone, like, there's been opportunity galore. And then being careful here to not overreact. You know, these up moves are the scary part. Again, these have been the buying zones this year. So I have more long stock positions than I've had in a very long time. So overall, I am still leaning slightly long deltas, but as this comes up, I may not. And I'm targeting, my profit targets are, even though I'm long deltas, they're still lower than the current valuation. This is where I make the most money, because what I don't want to do is lose money if it goes down. So I want to make money, and that's on an overall, my positions when I put them on. It's why when I showed you that scorpion trade, when I'm putting on a scorpion, it has a target to the downside. It's very important to understand that when we're above the moving average, like we have been here in this last 2 weeks, this is not really a great time to be buying stock. What we want to do is look for these opportunities that were slight, but were right here. And last year those were very slight. There was not a lot going on. Right now, we're going to see some whippiness. My expectation is that we are going to trade in a fairly narrow cone. I know I'm drawing under my face there, but that's the assumption going forward, is that we're not going to be up to these levels in December. Like I certainly, and anybody thinks, oh, it's like a December rally. We're not doing that. I'm pretty convinced we're not doing that. So I'm not going to play my portfolio like that. Hi, good to hear from you. Always good for you guys to join. Joining after yoga as usual. That's amazing. I should do more yoga. I have a love-hate with yoga. What is the best way to defend a short call knowing that I don't mind owning the stock/ETF? Short calls are hard to defend. Generally, the easiest way to defend a short call is to buy stock immediately when it hits the short call strike. That is tough to do because you're often, when a short call is being tested, you're buying at exactly what I just said, which was don't buy when it's above the moving average. So when short calls are getting tested, you're buying at the high. So short calls become an extremely difficult thing to defend in general. Most of the time when I'm doing this type of trade, when I have a strangle on, I'm moving up the short put, and if I'm naked on that call, what I want to do is roll out earlier. So if I have like a position expiration date here, and that's my target zone is right here. Let's draw this a little better. So we're getting close. The short call is going to get tested. This is my max profit zone right here. And when we're pushing out, usually what I do is I move it. I move the zone. I did a video converting strangles to straddles, and that is kind of how I did that. That video, strangles to straddles, if you check it out on YouTube, is a very, very comprehensive video on how I adjust with those short calls. They can get dangerous. Another thing to do is just to buy some shares. Buying into a dollar cost average situation is not necessarily a bad thing to do. So if I feel like with Etsy, I didn't actually do it on Etsy, I'm regretting it. I put on a butterfly, but this Etsy move, like, look at this craziness. Like what's going on here? 4 days of this, just absolutely obliterating. When it started testing my call, which was right in this level, what I did was I put on a butterfly that was going to make some money here. And then that way, if the stock went down, the butterfly would lose a little bit, but I'd still be in profitable zone. And if it went up, I had a butterfly that was making money. So that was one way to kind of fix the situation. Unfortunately, the butterfly had to have some risk to one side, and I actually put it above 126. And so now the stock is trading even above. So now my short calls are losing money and the butterfly is moving money, which is just like insult to injury. But it's part of it. We lose some positions sometimes. Etsy paid me very well here, and here. If I lose a couple $100 here in this one move, I'm still up in the last little while. Etsy always pays me very, very well, and occasionally I get burned by a stock move like this. If I'm worried about it really pushing up, the best thing to do is just buy shares. Just buy 25 shares. Now I have 25 shares that cannot lose money on the upside. So it adjusts my delta, it tweaks the delta a little bit. Let me show you on IWM, because we were talking about that trade earlier. If we look at the risk navigator, here's IWM. This is what the profit profile looks like. If the stock was all of a sudden pushing up, what I can do is I can just go over to find my chain here. I can just go and buy some more IWM, and it's pretty simple. So if I bought 25 shares, not 254, not what I'm trying to do. If I bought 25 shares at buy at the ask, another $4,000. And again, this is where it's important to play within our account size. But you can see what happened to my profit profile. It just fixed it instantly. It's now it's bullish. I've got 25 shares that are making money, and the slope is considerably different. So if the stock was trading over here at this level and was moving up in price and I was losing money, I can lose less money by just buying a couple of shares. So that's how I adjust that profit profile. In this case, it's not tested, but that's one way to adjust your deltas, is just get longer deltas. So when the deltas become short, where is that? It's funny. My risk navigator is never this small, so I'm always trying to look for something else. In this case, now I have 11 deltas. Before this was a delta neutral position, but now I have 11 deltas because my stock position here is 62 deltas, and the short deltas of the 196 call and 180 call only add up to like 51. So I have 11 long deltas in this case. Buying shares is the simplest way to reduce delta exposure on tested short calls. Yeah. Okay. Get LM. Can you explain naked call risk, and is it better to do a cash secured put? Those are totally two different trades. So if I look at, let's just look at something that we haven't traded here today. Let's look at Fiverr. So just for funsies, let's look at the December contracts. So you've asked about a cash secured put. A cash secured put means I'm going to buy shares for $35 a share, $3,500 total, 100 shares of stock at $35 each. For that agreement, I'm going to collect $145, 25 short deltas for this position. And I shouldn't say, I'm selling it short. So this delta is negative, and then I'm short selling it, which gives me positive delta. If we look at the move, that's a cash secured put, 78% probability of profit. If the stock trades at $23, I lose $1,000. So this is a cash secured put. It is completely the opposite position from a naked call. So when you're looking at a naked call, a naked put, or a cash secured put, either one, the risk is to the downside. If the stock goes down, the position loses money. On a call, I still collect the same $150 for selling this call, but in this case, the risk is to the upside. If the stock goes to zero, I get to keep my $150, so there's no downside risk. If the stock goes up to $60, that's when I would lose money. So comparing a naked call to a naked put, they have opposite risk. Both of them are being sold, both of them start for a credit, and they're both very similar. Typically, when I'm doing one, I'm doing the other, because what this does is it gives me profit profile to both sides. Now I have risk to the downside, and I have similar risk to the upside. I collect more money. Instead of being $125, I'm now collecting $300. So if it stays in the middle, I have double the potential, 64% probability of profit, because I can lose money on either side of the trade, as opposed to we had 78 for the short put, we have 76 for the short call. So independently, those probabilities of profit are higher because the zone is bigger. In this case, that stock could go down to zero and I'd still make $150. So, but the risk is to the top side. Bob says, thank you for the talk through. You're very welcome, Bob. And if your messages are being retracted, that's not me, that's YouTube. I don't know what it is why they do that, but feel free to just type again and just word it slightly differently. Foyed saying, thank you. I'm selling at the money to get some premium, but yes, the upside risk remains open if I don't buy immediately. Yeah, so typically what I do if I'm bullish on a position, which is when I own stock, I usually am bullish. I give it a little bit of room. I don't give it a huge amount of room. I want about 30 deltas. So I look at it I think about it in this way. 100 shares of stock is 100 delta. If I sell a 30 delta, I've now reduced my delta to a positive 70. I still am long delta. I'm still making money. But I am reducing my delta exposure. So I'm making a decent amount of money if the stock doesn't go up. When we sell short calls, they are a negative delta position. So when we sell a naked short call, that's, your negative 50 delta right there. So you're actually taking an opposite stance to the market. I don't like to have that kind of directional assumption at all. The technical analysis right now is showing that we're in a slightly bullish market, and I don't really want to bet into a bullish market against it, which is why I have long deltas right now. But I'm building all of my trades very specifically, so I have the trades themselves and the stock positions have room to move. So when the market does move up, I'm making some money, but I have slight humps for like profit spikes to the downside. That's really what I'm looking for, is profit spikes to the downside. And Get LM says, thank you. You guys are welcome. Okay, it is 12:34. I have been talking for an hour and a half. You guys are awesome. I'm going to push this button that says, let's get rich together, because that's what we're doing. We're hopefully increasing our knowledge a little bit at a time, because I know that this is extremely complex and that it takes a long time to get to this place that I have gotten to in my head. You guys are amazing. If you're interested in joining the Discord chat, you can come on, you can post screen grabs, you can do all that stuff. You head over to Patreon/drawbridgefinance, and you can do that. Or you can head over to my website as well, drawbridgefinance.ca. There's information there. And yeah, you guys are great. I will talk to my patrons in the Discord. I'm probably going to put on a couple more trades. I don't know what's going on. I haven't even looked here at the market. We're back up 1.3%. Oh, sorry, I clicked off that. Q's back up 1.37%. SPY is at 0.7. So obviously, whatever was going on, missiles and stuff are not so bad. The VIX is barely up. Was 9% at one point during this stream. Now it's back down to 24. This is still a good level for selling premium. So going to be doing some more trades. Okay, I'm out. Thank you so much. Appreciate it. Take care. Bye.